We're going to discuss who pays taxes and who doesn't. In the eyes of the IRS, there are entities that pay taxes and entities that do not pay taxes. The entities that do pay taxes include individuals like you and I, and C corporations, commonly known as regular corporations. The other entities that do not pay taxes are known as flow-through entities. The reason it's called flow-through is because the income is not taxed there, but rather it flows through to the owners, and then the owners pay the taxes. Examples of flow-through entities include limited liability companies, LLCs, S corporations, partnerships, limited liability partnerships, and such. So if you happen to be an owner of an S corporation, you'll notice that there is a tax return, which is also known as 1120S. However, the corporation itself does not pay any federal income tax. It sounds like a great advantage, right? Same thing goes for an LLC and also a sole proprietorship. None of those flow-through entities pay federal income tax. However, as a result of filing a tax return, usually you end up with some documentation that shows how much went to the owner. And then the owner, the individual, when he or she files a tax return, they're taxed there at the individual level. So therefore it's known as a flow-through entity. For example, if you have an S corporation, you'll file the 1120S federal income tax return for an S corporation. As a result of that, you'll have what's known as a K1. That K1 is what you include in your individual tax return, which is also known as a 1040. So in that individual tax return, that K1 comes in and it shows how much your S corporation made. They did not pay any taxes on that, but you, as the business owner, have to pay taxes. What about partnerships? So two people come together and do business together. They form a partnership. Then the partnership files a partnership tax return. However, the partnership itself does not pay any taxes. That's why it's also known as a flow-through entity. As a result of filing a tax return, you have two K1s now, one for one partner and the other partner. And depending on how you guys agreed upon to split the profits, the K1 amounts will differ, and each individual will then include that in their individual tax return and pay taxes there. So once again, tax-paying entities include individuals and C corporations. Flow-through entities include sole proprietorships, S corporation, limited liability companies, also known as LLCs, partnerships, and limited liability partnerships. In general, there's two groups of entities. Thank you. Oh, and don't forget to like and subscribe.